Good morning, good evening, good afternoon, Trader Steve here at Logic FX Trading, and welcome to our trading room recording on Monday, the 9th of August 2021. Okay, guys, we just start by looking at the economic calendar for Friday, and with non-farm payrolls come in at 943, which is was up on forecast, and as a result, the dollar went long on Friday, guys. Now, I had been calling it short, but I did say be very, very careful of trading the news, because if the numbers come in high, in which we didn't know where they were going to come in, that's why it's called news. If they come in high, the dollar will go long. If they come in low, then it'll continue to drop. So the important thing there was that if you were shorting the dollar, to make sure that your stop loss was at zero, so that when it went long, you didn't lose any money, guys, which is exactly what I did. Got stopped out for another zero. Not a big deal, but obviously we would like it to go the other way, but we don't control the market, guys. All we can do is see opportunities, take the opportunity, and then become, defensive in our management of the trade until we get to a point where we think, okay, time to take our profit. All right, so that was Friday, guys. Now, is the move up? We'll look at the chart in a moment. Is the move up sustainable? That's the next big question, guys. Personally, I don't think so, but we've got another month before, well, is it a month? We've got a few weeks at least before we get the next interest rate decision or the next speech about the interest rate decision. And in that time, we'll make up our minds what direction we think the dollar is going to continue in, guys. Personally, I think it's going to stay in a range, which kind of makes it okay. If we're at the top, you trade down. If you're at the bottom, you trade up. That's usually what you do with a range. So I've still got a sneaking suspicion that it's going to drop off from where it is. And for all the reasons we talked about over all the weeks and months, guys, we've got Delta variant causing havoc around the world. We've got the fear of inflation, which should move the Fed, which would maybe strengthen the dollar a little bit. We've got taxes coming up for all the infrastructure spending that Mr. Biden wants to do. So you got to take all these things together. And that's what we do here every morning, guys. We go through, we're looking at the general picture of the world economy today, and then we're looking for decisions. We're looking for opportunities to say, hey, there's something that's happening. Let's look at that. Or that thing we thought was going to happen isn't happening. So maybe we need to change our mind about what we were going to do there, guys. And that's what this is. And I do this for myself every single day. And then people started asking me to do some recordings. So I started putting this out as a backup to the training course. So this isn't the final decision-making process. This is filling your head with what's going on today. And then out of that, how do we make a decision? And then we go on and make a decision later in the day, guys. Okay. And then today, inflation rate in Mexico and inflation rate in China come in slightly high there in China. And we saw the recent drawdown in the Chinese stocks, not necessarily because of inflation fears, but because of the movements of the government over there. Remember, it's a command economy they've got. Well, the part of their economy is capitalist, but there's a big government sitting over it, which can just click its fingers and very quickly change the circumstances. So remember, the Chinese market is very, very different to the European or the American markets, guys. And just a quick look ahead. Tomorrow, economic sentiment in Euro, and in the next 7 days, let's see if there's anything of importance. Inflation rate in Germany, new yuan loans, China, core inflation rate in the United States, GDP in the UK, and then Michigan consumer sentiment. So a few bits there, not a lot really to get your teeth into this week. Now, one of the biggest results of of the dollar going long was that gold fell, guys, which wasn't great for me, because obviously I have a hedge, about 10% of the accounts in gold as a hedge to the stock markets eventually dropping. But sometimes when you've got a hedge on, guys, it goes in the wrong direction. Now, there was a flash crash in Asia, but literally it's come back up to where it was, which is a relief for me before the American markets open. But nonetheless, gold isn't looking great at the minute. But yet again, we'll have a look at that chart in a moment, guys. Before we go on and do that, quick look at Flipboard. Pfizer has manufactured the first batch of the Delta variant vaccines. Could boost Pfizer. How to invest in metaverse, guys. Now, I don't know what metaverse is, but obviously we've got to keep ourselves up to date with what's coming up. So I had to read through that, and I can't explain it now, but it's there for anyone to read. Brutal advice every weekend warrior stock trader needs to hear ASAP. I better have a quick look at that for all the weekend warriors. Oh, I don't know what that's about, guys. I'll not waste your time. I'll maybe have a look at that later. 3 unstoppable healthcare stocks to buy now and hold forever. Guys, healthcare stocks started taking off about 2 or 3 weeks ago. The problem now is that a lot of them have spiked, or the ones that the market think are important have spiked. So you're going to have to wait for a correction before getting into them. But obviously, it's an area to keep an eye on. Cathy Woodard trims Tesla stake second day in a row, sells $111 million worth of shares. Listen, down the road, Tesla is a fantastic company, guys. It's going to be doing great things. But whether the price that is being asked for it now is the right price or not is another thing. Personally, I think it's too expensive. If it came down a lot lower, I would definitely be buying into it. Are you missing out on a sudden 85 billion biotech stock rally linked to that, guys? I think we talked about that on Friday, actually. Dow futures fall, Tesla Cybertruck delayed. 5 top performing liquid stocks to snap up for higher returns. Let's have a quick look at what that is. No, it's not going to let us see it. Some of these things you got to sign into them, guys. These cheap under the radar stocks may be worth buying for a second half. Of course, what you do with these guys is that you go through this is a video, we'll not run it. You go through the news, you go through these articles, and then you got to do your due diligence. So you go through it, you might see something you fancy, according to the reasons that the article's giving, but then you've still got to go and do your own research, and then go and do, look at the chart and see whether, from a charting perspective, it's in a buy zone or a buy setup, guys. So don't just jump into, a stock because these guys say it's good. These guys are trading in a different way to what you and I would be trading, guys. Flash crash rattles gold markets as Bitcoin holds strong. Yeah, I got rid of my Bitcoin last week, not necessarily because of anything against Bitcoin, but because I didn't like being in Coinbase. I didn't like the whole idea of having to jump back and forward between the two accounts. And I sold that up and sold Ethereum up. And it cost me a lot of money to sell them. It cost me a lot of money to buy them. So I just don't like Coinbase, guys. That's the reason I sold. And of course, now we had the nice move up on Ethereum and Bitcoin. And now I'm looking at it and going, well, that costs you a little bit of money, but long term, I wasn't going to stay in it anyway, guys. So I just got out. The plan was to buy it and then add and build up a position. But I decided I didn't want to do that in Coinbase. That's the only reason I sold. So it has moved up. I might have to make a different plan. Maybe I buy a little bit of Bitcoin in our eToro account. Although the time might have passed for that. If we go and look at the chart, let's look at Bitcoin chart here, guys. Just while we're talking about it. I bought in here. I actually did. Is this right? Yeah. Yeah, I bought in here. It was really good time to buy in. And then I sold out again here somewhere. And then I bought in again and went through this and then sold out around here. When we got that, I sold up. I don't know whether it was in eToro or whether it was Coinbase. I sold that move, but maybe it would have been better to hold on to it, guys, for the long term, because there's a lot of jumping around to do, but I do believe eventually it'll get higher and higher. Is that the bottom? Well, we don't know that, guys, but it certainly was a nice place to get involved. And the reason I got involved there was because of this. Every time it came down into this zone, which was 30,000, every time it broke below 30,000, it went back up again. So that's the reason I got involved in it, guys. And the reason I sold was because every time after that, it had dropped again. So I thought, well, it may well drop again. So I took the profit. But there you go. So we'll come back to that in a moment. Where were we? Oh, I in here. Novavax positions its COVID-19 vaccine as a universal booster of choice. Now, Novavax, haven't looked at the chart recently, but I assume that it's taken off like that, guys. Too difficult to buy. Alibaba stock too big to fall. I sold up again the other day. Can't remember why I sold it. Might have hit 5% or something like that, guys. Okay, that's that. Quick look at the portfolio before we get into the charts. Still a little bit in the red, for this month. We're in headwinds this last couple of months, guys. Struggling a little bit. The majority of this drawdown is gold, drawing down on me, guys. But there you go. And then over in the portfolio here, I've sold a lot of stuff, guys. Taking money off the table. We're now 54% in cash. And the whole reason for that is, if we go over to here, guys, these have come up so high, they need to correct. Now, when we were here, I copied this and stuck it in there and said, I think that's how the market's going to move over the next couple of months. And it's done that. And now I'm thinking it needs to correct again. Now, that doesn't mean it can't move up another leg. But somewhere in here, we need a correction, guys. We need one of these or one of these. And it could even turn out to be bigger. Now, how do you time that? Well, you can't, except there are times for me, the way that I'm trading at the moment, there are times for me to buy into things. And there are times for me to take stuff off the table. Now, the only things I take off the table are stocks that are in the green that I believe are going to fall back below red, or sometimes if I'm in a bit of a concerned state, I'll maybe take something that's a few dollars or a 0.5% down, and now and again if something's hit 30%, I'll take it off the table. But that's not what we're doing at the minute, guys. So you can see how this chart's been moving up, guys. Let's just go to 10 hours. You get a run, and then you get a correction. You get a run, and then you get a correction. You get a run, and then you get a correction. Now, we'll not get another run like that. Those are very, very favourable conditions. And we've had this run as well, and we do need a correction, guys. Even if it's just going to stay in this channel, it needs to correct. Now, is it going to correct today or tomorrow? I've no idea. But what I'm saying is that I don't want to get caught out in that. Because if you go back over to here, we were drawn down the last 2 months, despite the fact that this has been moving up. We got drawn down there, then there was a bit of a move there. But in the meantime, when that drawdown started, I moved out of growth stocks, guys, moved more into defensive stocks, which is the reason why I'm struggling a little bit this month. But those defensive stocks will work. They'll reap a reward for us, down the line. If this were to correct in that sort of magnitude, then you would see how gold would push back up against it, guys. And iron ore and banking and different things, guys. Okay, so that's kind of the overview of the portfolio at the moment. What's the chart doing? We're still on it's kind of going flat this last couple of months, guys, but we were in a nice climb prior to that. And the target for the year is 20%. Still, don't know if we're going to make it or not, but 2 or 3 good months in here would certainly hit 20%. So let's carry on. Let's get over to the charts and have a quick run through them. Nasdaq, things are looking a little bit iffy today. China was down. Europe's down except for Italy. Now, guys, they're not huge moves, just little moves. And the VIX is up at the moment, which usually indicates that that you're going to get a drawdown here today. This will be live with futures. There was a little bit of a move up this morning, but nothing to write home about. We're certainly not expecting... Let me move this, guys. We're certainly not expecting something like that. Certainly not today anyway, guys. And I'm going to scribble this in over here just to remind us, because at some point, whether it's this month or next month, I think we'll get something like that. Could be when Jackson Hole comes around. Maybe the Fed says, listen, we need to start tapering. We need to look at the inflation, and then you'll start to see people selling off. A little spike up there. I think that was Friday, the 6th of August. Yeah, that was Friday, guys. This isn't live at the moment. You could see a little... I don't think you'll see much today, but you could get a little bit more upside to that. But if you look at it overall, I know some people say, well, that's a breakout, but, I'm not convinced. Wouldn't be surprised if you saw something like that. S&P still carrying on up, but at some point we're going to get a correction. I'm not saying from here. I'm just saying at some point we're going to get a correction, guys. And I don't want to be caught in it. Nikkei, still in this with the hope that it'll eventually break out. UK still running flat there, guys. Can it break out and go long? Yes, but I think with Delta around at the moment, there's probably still a little bit of, holding back going on. The bond rate in the US has gone up this morning. That isn't good for stocks, guys. And yet again, we're not saying it's going to do that. We're just saying that if it were to do that, then that would be a good place to buy into, guys. French been pushing up quite nicely. Remember, the European stock markets are way behind the growth that we saw on the American stock market, so they're kind of catching up, guys. Do you remember all that, how long it took them to get their vaccine programs running when they looked like Muppets for a long time? Well, they've probably caught up by now, but the stock market hasn't yet showed anywhere near the sort of growth that we saw in the US. That one, I suppose, has. Having said all of that, is that a trend? Quite possibly. So if that's a trend, what would you expect? You wouldn't be surprised to see something like that, and maybe even when it got to there, a bit of a correction. Now, I'm not suggesting that's definitely going to happen, but when you got that, look, how long did that take? 3 months, guys. That was more. Let's measure that. From that peak to that peak, 153 days, guys. So you could well have a period of time running flat. In Germany, same thing. It's come up. It's broken the top. I think it's the UK. It hasn't broken the top yet. Still a lot of value in the UK index, guys. And then China, as we know, we had that drawdown, but I copied that from somewhere and put it in. Must have been from over there somewhere. Yeah, it would have been there. And we're starting to see a bit of that. Maybe the panic's over. Let me put some sort of structure into that. So maybe it ends up running up like that, guys. Maybe a little bit less steep. Now, if you're not in the Chinese stocks, then it's it'll not mean anything. And I'm not saying it's going to run exactly like that, guys. I'm just saying we've had a zigzag down, and therefore we should get a move up. But what does the move up look like? Well, the reason I copy these is to get you away from the idea that it's going to go up in a straight line. All the arrows doing saying that's the direction it's going to move in. I'm not saying it's going to move like that. That's why I copy these, because even if it were to get to there, it'll get to there something like that. And then Hong Kong, similar situation. We've had a zigzag down. We've got a little bit of a pullback. Even within that, there's 5. You can see it. Oh, is there 5? Remember, guys, Elliott Wave isn't painting by numbers. It isn't exact. It's about a general overview of what it looks like. It actually looks more like a 3, doesn't it? 1, 2, 3. That 3 there, guys. Yeah, I think it's done. We've got equivalency in here, more or less, a little bit further. Yeah, I think that's done. So it's going long. Aussie continuing to push up, looking for a correction within it, purely and simply because that's how these things move. Russell, it's still in this massive complex correction here, guys. Was looking for a bit of upside to it. I don't trade it, so I'm not going to dwell on it, guys. And there's the move on the dollar, guys. Remember, we're on 4 hours. But I wouldn't get overly excited about that, guys. And I'll tell you why. Look how many times, you get, just trying to look for an example. You get a flash up there and then it dropped. We got a few flashes up there and then it dropped. We got that move up there to complete that zigzag and then off it went. That was coming down nicely. And then look at that. Now, how many people would have jumped in long there who didn't understand what was going on, guys? So, but just because something spikes up doesn't mean that it's going to continue in that direction. Can it mean that? Well, it can mean that, but I don't think that it does necessarily. And therefore, I'll not be trading it in either direction. If I were to take a chance in this, I would take a chance that it's going to drop. And look at that as well. There where we had that spike up and all of a sudden it reversed again. Now, eventually it did go, but I'm just saying to you that because you get a spike like that doesn't necessarily mean that you're going to see a continuation of it. There's an awful lot of uncertainty out there at the minute, guys. And I know that by, as I say every day, I put Bloomberg on at 8 o'clock in the morning, and it's more or less on all day. Now, obviously, I don't sit and listen to it all day, but, it is on. It's on a lot, and you pick up the tone of what they're talking about, of when they're excited. For example, way back over here with the Nasdaq, when we were in these zones here, they were excited every day. And then when you get into where you're starting to get a drawdown, they're really excited as well about the fact that it's drawing down. But recently they've been very, we don't know what's going on here, but let's try and sound excited about it. But they don't know what's going on. And it's not just the news team that don't know because it's going on. It's the guests that come on, because everybody's kind of going, well, if the Fed does that, if inflation does that, if they do that, then this will happen. But if that doesn't happen, then that will happen. And I know often you get a lot of that, but not through this period back here. It was all about, it's up again today, it's up again today, it's up again today. Up 7 days in a row. We've had a bit of a correction. We're not getting that at the minute. Everybody's starting to get wary that these prices are getting too high and they need to correct. And when you hear that mood music changing, guys, it's a time to be cautious. And I know that anyone who's learning to trade or anyone who is trading would love me to come on here and go, hey, there's a great trade. Put all your money into that. And this time next week, you'll have doubled your money. Well, that's not how it works, guys. If you do that, you might get lucky. But the next time you do it, you won't. In other words, you're playing roulette. And you won't get lucky the next time. And you'll lose all of your money. And then you'll be out of the game. So you have to be cautious. Euro US. Is it going to continue down? You know, is that something? Is that a running flat, guys, before it drops? I don't think so, guys. I think there's more upside to this. Pound, well, with all that big drop on the dollar, or that big push up the dollar, should I say, that structure hasn't really changed, has it? That still looks long to me. Aussie, there's all you got there. It was a little bit of a pullback. That hasn't changed that structure. Can it drop out of there? Well, it can, but that wasn't a structure we're really going to trade long anyway. What was said was if the dollar drops, then this will take off, but don't be trying to trade it because that structure's a bit rubbish. And it was the same with the New Zealand. And we did have a bit of a breakout on the New Zealand earlier in the week, and then the drawdown in the dollar, the push up the dollar drew it down. But you wouldn't say that that structure's changed. Certainly not at the moment anyway. That structure's still running like that. So it's still within. Can it break out? Well, it can, but I wouldn't bet on it in either direction. CAD, now there's a little bit of a problem with the CAD in that the oil price has dropped. And I think that Delta is just causing a little bit of a slowdown, so that the demand for oil isn't there at the moment. But remember, we're coming into non-hemisphere winter, another couple of months, so oil price will pick up. This is tricky at the minute. A lot of people would say head and shoulders or whatever. I still think there's a bit of downside to that, guys, which is going against the dollar. Yes, Swedish pushed up. Now remember, I'd already got out of this. Listen, even though I'm saying that I think they're going to drop, I'm not saying jump in there short, guys. Wait for it to start to drop. Wait for the mood music to change. Wait for a setup. And then if we see that, we'll talk about maybe trading it. Remember, all we're doing here is analysis and saying what do we think is going to happen next? What are we looking for next? Now, there you have yen dollar. We were looking for the yen to drop. But we were also looking for the dollar to drop. So we kind of said it wasn't worth trading. As it turned out, the dollar went long and the yen dropped a little bit. That's why you had that exaggerated move there. What's next for it? Well, could possibly, I don't know. Leave it. I certainly don't want to put a long direction on the yen. Now, this is one where I did get stung, because remember we were talking about the dollar dropping, which would push the gold price up, which would push the Swiss up, which would make that accelerate in that direction. Well, obviously the opposite happened, in that the dollar went up, gold went down. As a result, the Swiss went down. So you had a really nice move up there, guys. Possible little ending diagonal coming in there, and it's entirely possible that this whole structure continues like that, guys. But I wouldn't jump in there either direction. I'd just leave it alone at the minute. Now, there's the flash crash on. That was the move with the dollar dropping there, guys. And then there's the flash crash we had in Asia. Now, price is back to here. Now, interestingly, look where I drew that. Do you remember when we were here? Zigzag. And I said if gold price comes down into there, it could well be a good price to start trying to trade it long. And why did I choose there? Because of that. And because of the equivalence here. Let's take it to there, guys. That's probably a little bit too much. No. Pretty close. I don't know which of those two is the top. Very, very close, guys. Equivalence into that area. And then that's the area you'd buy it off. Obviously, it's come up in a flash crash. Does that mean it's going to go long from there? The danger with flash crashes is, guys, that sometimes you get, it flashes down, comes back up, and then, slowly but surely over the next lot of days, it gets to there, and then it starts to recover. So I'm a little bit wary of jumping in, after the flashes come back up again. Although, let's have a look. These aren't major flash crashes, but look, flash down, look where it went. Flash down, look where it went. There, that one came down again. That's an example. Remember, we're on 4 hours here, guys. That one flashed down, came back up, and then proceeded to go down. That's what I was trying to indicate over there, guys. Where it can flash up. Where did I draw it? Didn't draw it there. There. Where it drops, flashes back up, and then it closes the gap before it goes. And that's an example of it over there. Now, I don't know which of the two it's going to do, guys. I'm already in gold. The one good thing I did last week, guys, remember, there's two ways. When you're trading an account, there's two things you can do. One is, obviously, you can make money. The other thing you can do is stop yourself losing money. In other words, you can become defensive. Take something off the table. Well, when this move came in last week, do you remember I'd bought into PHYS, which was physical gold, and I also bought into PSLV, which was physical silver. Well, a similar thing happened in the silver chart. We'll show you that in a moment. We got that wee spike up, and I thought, oh, here we go. This could be the start of the move. And then it came back down and kind of had me back close to zero. I can't remember exactly where I get in, whether it was over here or in here somewhere. And just as they came into zero, I said, well, I'm not going to go into the red with these, because there was always the danger of the completion of that zigzag. So I got out of them. And by getting out of them, I saved myself that from there right down. Now, those two trades would have been, easy 10, 15%, maybe even more in the red. And I'd now be sitting on top of all the other gold that I have in gold mining shares. I'd now be sitting going, well, when's this going to come back up again? So I'm so glad I got out there. I'm now considering buying in again, but I'll just keep an eye on this for a couple of days first, because if it starts doing that, then I'll wait until it gets back down to there, guys. And if it starts coming up, then I'll look for maybe a little setup, and then we'll go. But we're listening all the time to what's going on over there in Bloomberg, what the fundamental news is and what the sentiment is. But it could be a half decent place to buy some physical gold, so long as you're prepared that it could have a bit more downside to it. So it's not a trade, guys. It's a position. Remember, we're mixing it up a little bit. There are things that we'll jump in and out of, and there are other things that you just want to hold on to, because at some point in the future, gold should be away up here somewhere. At least back to there and possibly above it. But But when's that going to happen? Well, we don't know, guys. It could be when inflation takes off. It could be, when the stock markets start to drop because the Fed's starting to tighten, and then you'll see a bit of movement into gold, guys. And there's the same movement on silver. And I've still got SLV, which obviously is contributing to this drawdown and the gold. But the ironic thing is I bought both of those to protect against the drawdown on the stock market. And it's actually the protection that's drawn down. Having said that, the stock market hasn't really gone anywhere either, and I do think they'll be okay for down the road, guys. So we'll get that drawdown back over here somewhere. Hopefully this year rather than next year. So where were we? Right. So yet again with this, I think it was with that. I thought to myself, okay, this is looking like it's going to be the start of the run-up. That's when I get into physical PSLV as opposed to SLV, which is an ETF which covers all sorts of stocks to do with silver and maybe has a bit of physical silver in there, but most of it's just silver companies or companies that trade silver. But the physicals, you're actually banning the physical thing. Well, you're banning it. Physical gold in paper form, because obviously this is paper we're dealing with here. Now, so when it flashed up, I thought, great. But when it came back and got close to zero, I got out of it. And then, so we missed that, and certainly that bit there. So it was a nice little defensive move on my behalf. There's another little move up in Bitcoin since we started talking, guys. Ethereum's doing the same thing. As I said the other day, I wouldn't be interested until I got a correction. It's the same here, guys. If you get some sort of setup on it, maybe that's the place to get involved. Remembering the size of that impulse move there, you'd really be looking for something to come back down into there. And if it doesn't happen, then, guys, you got to let it run until it does correct. So why do you have to let it run? Well, what happens if you'd have got involved here somewhere? Next thing you're down there. Or if you got involved there, next thing you're down there. And it's okay looking at the chart once it's happened. But if I did this, and you've bought in there and it's just done that, how confident are you that it's going to continue on up, guys? You've no idea where it's going. So what happens? You bought in there. It's just done that. What are you doing? I'm getting out of this. I've lost enough money. And the next thing you know, it's way up there somewhere. So it's always easy looking at the chart when it's already happened. What's difficult, guys, is looking at the chart and saying, well, what's going to happen next? And therefore, the minimum thing you've got to do is at least buy in when it's done something like that in the hope that it's going to do that, rather than buying in there in the hope that it's going to do that. Because in all probability, it could do a wee bit of that, a little bit of that, and then come down. And then you're left with that situation. Is this going to keep going, or is it going to turn and go? And that's where the psychology comes in, guys. So from a psychological point of view, if I've bought in here with the hope that it's going to go, and it continues to drop, I'm kind of at least saying, well, we're still in a correction. I'll at least get my money back when it comes back up to there. But if I've bought in there and it's doing this, at some point I'm going, oh my goodness, I've lost enough. I need out of this. And not only that, but from that day to that day, which could be months, by the way, you're worrying about that trade. So by buying here, you at least cut that time in half. Let's say it was a week or 2 weeks, guys. So for a week, you were worried about it, whereas from there it would have been 2 weeks. And by the time you're into the 10th day, you're going, I'm getting out of this. And then on the third week, it does that. So it's important where you get in, not just from, a trading point of view, but from a psychology point of view, guys. There's the drawdown in oil. It's currently at the bottom of the range that I said it would stay in. Let's see if it does. But I wouldn't be surprised if we saw it coming back up again within this range. Can it drop further? Yeah, it could drop to there, guys. The bottom of that little pullback there. Maybe it comes on down to there, and then the range turns out to be bigger than I thought. But it will not be going away down there, guys. Oil price is going to stay up here. And you say to yourself, well, what's the point in that? How do I trade that, guys? Well, I don't trade oil. What I do with oil is it gives me a hint about what's going to happen to the CAD mainly, or maybe the Norwegian krona, which I don't trade because it's too expensive to trade. I found that out last year. And also what's going on with the world economy, growth, etc. So there's reasons for keeping an eye on it over and above actually trying to trade it, which is the reason why I kind of just scribble on it, guys. And I say, listen, it's staying up there. Now, so why is that? Also, oil stocks, if you're into BP or Royal Dutch Shell or, any amount of other oil stocks, obviously the oil price is important for those as well, guys. EuroCAD. Little bit of a push down there, I think mainly due to the drawdown we had because of the dollar the other day affecting the euro. But that's not something I want to get involved in, guys. I don't know what's going on in there. Now, there are people who spend hours working out that that's an A, B, C, ending diagonal, blah, whatever. But it's not blatantly obvious. Therefore, I wouldn't waste my time on it. And by the way, the reason that I don't do that is because I used to do it. And my results weren't all that much better than just scanning things and seeing something that's blatantly obvious and taking that, guys. Okay, Euro Oz, we said we're looking for a drawdown and then potential long move up. Of course, the long move up was based on the dollar going short and giving a bit of a boost to the euro. It's possible that will still happen, but I'd give it a bit more downside. Euro New Zealand, same thing. It's come into the bottom of that structure, whatever it is. And the next move's possibly higher. Euro Yen. Yeah, I'm looking for that. That possibly could go long, guys. Just going back to the yen. Remember, we're keeping an eye on the yen at the moment because we think this is a running flat. And we're looking for a breakout here, which could then give you any number of trades short against the yen. Well, you had that move because the dollar went in the opposite direction anyway. If we'd have been predicting that the dollar was going to go long, then that would have been a good trade. Unfortunately, it wasn't. Euro yen, obviously that didn't turn out yet because the dollar went in the opposite direction. Therefore, the pair went in the opposite direction. Pound yen was one that I was in. Have I skipped ahead of myself here? I think I may have, guys. Let's just we'll get back down to there. Euro Swiss, looking for a breakout. There it is. Remember, I was very wary of trading this back up here because I was looking for a bit of strength in the gold price. But then we started saying here that maybe it could break out if the dollar goes short. But as it turned out, the dollar went long and it's broken out. Now, the reason for that is that gold price went short, which means that the Swiss has gone short. That's the reason for that move. Now, so what happens next? The danger with it is that I don't know if there is a danger with this. If the dollar drops, gold will go long, the Swiss will strengthen, which would push that in that direction. But if the dollar drops, euro should get a boost, which would push it in that direction. So there is the possibility that this would end up just running flat, guys. So be careful of that. So I'm not as keen on that now. Pound CAD? Nah. Pound Oz? Well, if it were to drop, I would look to trade it back up because of this channel, guys. And I know it's kind of pushed up out of it, and it could continue to go up, but I'd prefer a little bit deeper. Pound New Zealand. Well, we were from here, we were looking for the drawdown. We've got to there. Now, guys, look at that. So because I've drawn an arrow there doesn't mean it's going to do it. It could end up bouncing along flat for a while, but I do think that the next move will be up. So if you were to take that, you may well have to be patient. The problem is that if you fancy it and you don't take it and it goes, then you're going to be kicking yourself. But I suspect it could end up bouncing along flat. Pound Swiss. There you go again. Yeah, we were looking for that, guys. That's quite nice. Was I trading the pound Swiss at any point? Let's have a quick look at the history. US Swiss lost 9% in that. No, I don't think it was trading pound Swiss. Haven't done very well in currencies recently, guys. I'm a little bit. That's why I'm being a little bit offhand with them at the minute, because there are times when it goes well and there are times when it doesn't. At the minute, I don't feel it with currencies at the minute. That's continuing to push up, but yet again, if you're in it, remember, there's a difference between being in a trade and trying to get into trade. If you're in a trade, what you do is a different thing to what you're doing if you're trying to get in it. So if I was in that, and I thought that there's a chance it's going to continue to break up, which possibly there is, particularly if the dollar continues to get stronger, which would weaken the euro, which means that the euro would go, in this case, would go that way. So there is the possibility that could continue on up. So if you're in it and you want to ride the thing, you don't want to take a small profit, then put your stop to zero wherever you get into it and see if it continues to go up, knowing full well it could come back and stop you out for, well, at your stop loss, wherever that may be, probably at the zero. But if you're not in it, then that's a whole different thing, guys. If you're not in it, you're going to have to wait and see if it's going to correct to give you a setup. Now, for anyone that listens to me a lot, there aren't that many of you at the moment, you maybe get bored with this, but I've got to keep in my head that there are new people coming along all the time, and therefore, if you aren't already in that, you're going to have to look for a setup to get into it. Pound yen. This is another one that I have been in and out of. I think I just closed it there. Yeah. It was coming back down to zero, guys. It had been up and it was dropping again. And I just thought, I'm not going to go in. That's what all this is about. Baba. I got rid of Baba. I was a bit worried about what was going on there. Anything that isn't above 5% or close to 5%, I've closed it because I'm trying to get some money off the table, and I'm not prepared at this point to allow things to run into the red and then at some point in the future come back up again. If they've been in the green and they start coming back into the red, generally speaking, I'll just get rid of them. There's physical silver, guys, that I got rid of on the 5th for 0.23% because it had been up and it was coming back down again. And physical gold I got rid of the same day, 5th, at 0.14. And then as we saw over here earlier, do the gold, where's the 5th? That's the 4th, there's the 5th there. So as it was coming down here, I got out of it, and then it did this. I'm so glad I got out, guys. That's the reason for doing that little, having that little strategy where you've got into something that's done that. There's your stop loss. It's coming back down. Just get out of it, guys. Now, it could turn and go from there, but, if you're going to do hundreds of trades a year, the amount that's going to turn there and go again is minimal compared to the amount that's going to continue to drop on down. And then at some point down here, as it comes up, you can go, okay, there's a setup, still believe in it. I'll buy in here. And if it doesn't happen, it doesn't matter, guys. There's another bus comes along every 5 minutes in trading. So don't get stuck. Don't fall in love with a trade. Aussie yen, possibly long. Aussie New Zealand, it's just continuing to drop, guys. I don't know if we're going to get that or not. And I should maybe do a bit more work on that because I do like trading it. Aussie Swiss, well, we were looking for a push up on this, and that's the start of a push up. The reason that I might not want to trade that, remember, guys, is that I'm long gold, and in order for that to go long, because it's the Swiss, gold will have to drop. So I would be betting against myself if I were to do that. The other side, you could say, well, you're hedging. And I'm not sure that I want to do that either. So that's the reason I'll not be trading that. But it is entirely possible that this starts a move up. Aussie CAD. Well, if the oil price is going to continue to drop, then you could well see a breakout there, guys. Swiss yen. Now that's interesting. Yeah, well, what we said here was the same thing, and it's to do with gold and the dollar. Dollar went long, gold price went down, Swiss franc dropped. If the dollar had gone short, gold price would have gone up, Swiss would have gone. So that's the reason that we've drawn it twice. And the reason that I drew that in was, I said, be very wary of trying to draw that long because structurally it looks like it needs to do that. And therefore, you'd probably be safer waiting for it to come to there before looking to trade it. But I did say there is a possibility that it'll break out long, but that would be my preferred route. And, wishful thinking and all that, guys. But the reality of trading is that you do need to be patient. Wouldn't it be lovely just to see a setup and never mind all that fundamental stuff, Steve? Let's just take the trade. And the problem with that is that you ignore the fundamentals and you're busy trying to trade it that way. In the meantime, you're 5 or 10% down within, a day or two, with the prospect that it could possibly drop to there. We're not saying it will. It could just come back down into there for the meantime and bounce along before going. But when you see something like that, often you'll get the equivalent out the bottom. And the equivalence in this situation, I've drawn it to there because that's where my trend line is. Obviously, it could break that. But at the same time, you don't have to get, it doesn't have to be exact. So that would be equivalence. If that dropped from there to there, it would be equivalent to that, which would also bring it into that trend line. But having said that, that trend line only has 1 point where it is there. So I wonder, did I place that there with the idea that this could drop? Which would be, closer. Let's see if it gets down to there, guys. Maybe we'll find ourselves in a position of trading it up. CAD Swiss, my old pal. Didn't get into it the other day, guys. And the reason I didn't get in because I was a bit wary of the whole dollar gold thing, so I didn't trade it. But there you go. That would have been a nice trade. And then you have the choice. Do you put your stop to zero and allow it to ride on up, or do you take your money and then wait to see if we get another setup to go? Well, what you'd have to do now is you're going to have to be patient. By the way, I'm not always patient either, guys. And I do get things wrong because I'm not patient. So I'm just telling you what you should do, not necessarily what I do all the time, is that you should wait to see if you're going to get a setup in that. And of course, it could push on up before you get your setup. But whenever you get your setup, that would be the place, first of all, to check your fundamentals, and secondly, to decide to go. There is one proviso to this at the moment, and the fact is that yes, gold's dropping, which is pushing the Swiss short, which in this, because it's that side of the equation, means it would go long. But oil's also dropping, which should push the CAD short, which in this case would also be in that direction. So don't be surprised if this ends up bouncing along like that for a while, guys. CAD yen, very similar story, guys, in that I'm looking for a bit of weakness in the yen, which should push it up. But because the oil price is going short, I can't see the CAD wanting to go up. So it could end up just bouncing along for a while. And then when the oil price starts to recover, it could well go long. New Zealand yen, probably a better bet there, guys. New Zealand CAD. Ooh. It looks like a setup. I'm a little bit wary of that. New Zealand Swiss, yeah, nice move. We had our alarm line in the right direction, guys, but I'm not going to claim that one. But it has come down a lot. That is equivalence to this. So it's come up, it's gone flat, it's come up, it's going to have a zigzag. What's next? Well, I would not be surprised if we got a nice move up there, guys. Not immediately, not today, but if we look at this in 2 or 3 weeks or 2 or 3 months' time, I wouldn't be surprised if this chart was up there. Okay, that'll do it for today, guys. As I say, this is a general overview, a general analysis, looking for opportunities, which we then go into in more detail before actually opening any trades on them. Okay, guys, that'll do for today. Speak to you all again tomorrow. Bye for now.